Roman, you heard what Eamon had to say. You heard what the president had to say yesterday. You hear what the market is having to say. What do you have to say about all this?
I'd like to take a little bit of a break and maybe have some rest, honestly, Brian. But I think
well said.
I think we're not going to get much of that for the next 204 weeks. What I would say is there are a lot of cross currents right now in defense, the president's comments notwithstanding. And I would agree with Eamon. I mean, the prospect of a large nuclear agreement, either a bilateral agreement or a trilateral agreement, would be incredibly complex to negotiate, subject to verification, perhaps even treaty approval via the Senate. But I think if we just set those things aside right now, what you're seeing in D.C. is Senate and House reconciliation plan, dueling reconciliation plans that would increase money for defense, although there's uncertainty about how much that would add. Hawkish members of both the House and Senate are pushing President Trump. It's been reported in many places about increasing defense to 4 or 5% of GDP. Secretary of Defense Pete Hegseth recently reiterated that U.S. defense should be pegged at 3% of GDP. That forms an interesting baseline. If you pick your favorite GDP number and then extrapolate defense, that could be a $40 to $60 billion increase over the next several years. And then, of course, you've got the bigger issue of NATO spending. But the reality, the train right in front of us is the March 14th expiration of the continuing resolution, fiscal 25 appropriations. And I would say the mood in Washington is not hopeful that we are going to avoid a shutdown, an extended continuing resolution, or even a full-year continuing resolution, which has not hit defense. So then you can complicate that with the efforts of DOGE. I would certainly commend the Wall Street Journal on their reporting. But, I think the idea that the Pentagon offers up some DOGE treats ahead of time is probably unwise.
It's so, okay, the DOGE, Eamon, I was in D.C., you and I were talking in person. The Secretary of Energy in our exclusive last week was commenting about, basically these are people, we know who they are. There's a lot of mystery around this DOGE stuff, USAIDs getting kind of carved out. How does this go with the Defense Department? There's a lot we don't know. There's some things we do know, but it mostly seems like we're speculating on a lot of things.
We're definitely speculating because we haven't seen an effort this robust before to cut federal spending, Brian, and so we don't know what that looks like. In the entirety of my career in Washington, which goes back a ways now, if you looked at this fight and you were teasing out who's going to win, you would say pork barrel spenders on Capitol Hill will win this fight because they simply outlast any effort to create a blue ribbon commission or any other effort to cut spending. In this case, though, you've got Elon Musk, who is a singular figure, and Donald Trump, who, at least in theory, although he jokes about it, is not running for re-election again. So neither one of them are subject to the traditional pressures. And Trump controls his party to a degree to which, we just haven't seen, again, in my lifetime of covering politics. So you have to look at, congressional Republicans and their appetite to fight either of these men on this issue. We haven't seen, a real appetite for confrontation among Republicans who control Capitol Hill. You have to imagine that continues, at least in the short term.
But I think, Roman, as an investor, here's what I would say. We showed we put the chart up with the Defense Department budget, what it was, $840 whatever billion it was, okay? Let's say DOGE, they whatever this group is, they come in and they identify $100 billion in waste, fraud, and abuse. And so we hear President Trump say we're going to cut the budget to $740 billion, whatever it might be, right? Does that necessarily mean bad things for Lockheed, Northrop, RTX, and others, Roman? What if they're just making a toilet seat not be $5,000 and making it down to $50 like we all pay at Home Depot? You get my point. Does that necessarily mean that the publicly traded defense companies are going to experience cuts? I don't know.
I do. And in that circumstance, I don't think there is $100 billion worth of overpriced toilet seats. I think there is a certain amount of decision making in terms of priorities, such as DEI-related efforts or climate change-related efforts. We'd certainly see that. And you could see a change in prioritization, right? I mean, if the nuclear triad, if there were nuclear cuts, then perhaps the nuclear triad might be on the table for potential reductions. If you accelerated the push into unmanned systems, then you might see manned systems. If the decision is made that we're not going to fight war in Europe and that, or land conflicts, and that we wanted to move and refocus on Asia, you might see a change that way. But I do want to say there is an opportunity here. Right. I mean, SecDef Hegseth has focused on warfighting as a priority and that bottom line capability. And so if the department stops doing stupid stuff and is able to reapply that money to sort of warfighting equipment, that's actually might be a net positive for these companies. And I think
that's exactly what I was getting at, Roman.
Yeah. And I think that also applies across the federal government, right? Particularly not only defense-heavy primes, but government services companies as well that work in agencies and departments. If you cut headcount, you still need somebody to do the work. AI implementation, cybersecurity, quantum, post-quantum encryption protection, all of these things, these higher tech capabilities that the government needs really need to be done by the private sector. So again, I stress the fact that we're probably in for a few months, I think June at least, until there's sort of enough proof in the pudding for investors. But this isn't necessarily a net negative.